ready for the next panel now, panel number 4. It's going to be about scaling Bitcoin, how L2 networks will shape the future. So I would like to welcome all the panelists from Jiaheng Chang, Polyhedra Network co-founder, Kaitai Chang, Yala co-founder and COO, Jaack Barbieri, Routescan head of growth, Kawalec, Goat Network DevRel, and the moderator will be Serrano from Stack Ecosystem Lead.
Hello. All right. Good to get started?
Hi.
All right. Hi, everyone. Welcome. Thanks for coming out to the Bitcoin Staking Forum. My name is Serrano. I'll be the moderator for today's panel. Quick background about myself. I am the head of product at Bitcoin L2 Labs. We're a company that builds infrastructure in the Stacks ecosystem. I'm joined here today by my esteemed panelists. And today we're going to be discussing the future of Bitcoin L2s. We'll be discussing the use cases from Bitcoin yield generation to broader adoption of Bitcoin DeFi. We'll be discussing the opportunities and the challenges that developers are facing in building in this space. So without any further delay, let's go ahead and get right in. Gentlemen, you could each start out with a quick introduction about yourself and your company or your project. And yeah, let's start with you.
Hi, my name is Jiaheng. I'm the chief scientist in Polyhedra network. And in Polyhedra, we build the cross-chain bridge empowered by zero-knowledge proofs.
Hi, everyone. My name is Kaitai, one of the co-founders of Yala. We do a Bitcoin-backed stablecoin. So the idea behind it is allowing the BTC holders to earn yields across the ecosystem without selling their assets. Thank you for having us today.
Hi, I'm Kawalec, and I'm the lead developer relations on Goat Network. We're optimizing yield by building a Bitcoin layer 2 protocol that enables Ethereum developers to build applications that can effectively promote YieldFi. We optimize yield by creating decentralized sequencers, and we split fees across multiple delegates by staking Bitcoin directly using BitVM2. And Taproot.
Hi, I'm Jaack, and I'm head of growth at Routescan. We build a unified multi-chain block explorer, and we recently started indexing Bitcoin L2s.
Great. Okay, well, let's start things off at a high level here. I'd love to get a better perspective of the current landscape for Bitcoin L2s. So the first question that's open for the panel is just what's the current state of adoption of Bitcoin L2s? What are some of the trends that stand out to you? And maybe we can start with you, Jiaheng, and we can go down the line again. Oh, maybe we can do a reverse then. Jaack,
yeah,
go ahead.
Okay, yeah. So I think I'm talking like from the outside because we're just getting started in this Bitcoin L2 ecosystem. That's why I wanted to take part in this event. And what I'm seeing is that there is possibly more like concentrated innovation that on the Ethereum side, because it's just like on Ethereum it's like everyone just knows what they need to do, so they are just like it feels like sometimes they are everyone is adding complexity, while on Bitcoin it's just everything is yet to write, to be written, and so I see like more innovation in the sense that no one still like has achieved like a success, like a definite success. So everyone is up for competition, and this is what I personally like. And so like seeing, for example, BitVM and then BitVM2, and then all these innovations in how you actually make these Bitcoins work in some way. And it's not about like it's not only about the technical challenges, but how we convince people that the technology that you're having, you need to trust the technology and not just trust the people. So I guess, yeah, it's just getting started this year, and I hope for the 2025 to be like really, really much better.
I can help answer the question too with not just like the applications that are going to be coming over to Bitcoin and they're going to have like a new sort of like revitalized kind of Cambrian explosion from Ethereum or Solana land or wherever they're coming from. There's going to be a lot of L2s that are going to have their own approach on Bitcoin. So that's going to happen. But besides that, I think the optimizations for zero-knowledge proofs is really the key innovation that has to happen in order for research and development to really kind of push forward permissionless bridging. And I know that there's a lot of discussion right now as far as like whether or not it's totally trustless and whether or not we're actually going to stick to the multi-sig model. And I think in order for us to kind of get through a couple of these barriers, us as really as an industry need to kind of collectively agree on what's like the best approach for us to trustlessly bridge BTC to L2. And then once we kind of confine on what that model looks like, we're going to have a couple of options as far as what's the primary architectures and the ones that are going to be eliminated. And then I think that's when we're going to see sort of like the top 10% float to the top. And then we're going to kind of move forward from there. And then we're going to see that happen over the next couple of months.
We see L2 sidechain from another perspective. It's the user's perspective. So usually users are looking for mature ecosystems where they can earn yields across different sidechains. So I can categorize it into two parts. You have those who are more focused on scalability and then those on more privacy. For us, the bottom line is we have to make sure that it is secure for our user, and on top of it, we can bridge this liquidity via our stablecoin to their level. So sidechains, L2s, or other consensus mechanism related blockchains is for us agnostic. So we don't necessarily would prefer partner with any given chain. It's really depending on where user want to bridge to get yields on top of their Bitcoin.
For me, I totally agree with the previous speakers. I think L2 for Bitcoin is very important, whatever for the ecosystems and also the technology itself. And we are building cross-chain bridge, so we are very happy to bridge the previous L1 chains, L2 chains to the Bitcoin and to build the sign chain of the Bitcoin and to build together with developers to have the new ecosystem for the blockchain network.
Yeah, so the bottom line here is that it's still very early, right? And a lot of this infrastructure is still getting developed. We haven't seen any clear cases of product market fit yet, right? But to your point, it seems like the whole industry is doing lots of research and development right now to align on what are going to be these standards and these breakthroughs that are really going to push the industry forward, whether it's more trustless bridging models or L2 designs and things like that. So I'd like to turn things now a little bit to talk about the developer perspective. And so from your perspective, why should developers be looking to build on Bitcoin L2s, and how do you think that they might evaluate which L2s they should build on?
So this is I think this is a question that we can really answer like clearly, because it's like we're abstracting from everything else because we service everyone, but it's just like we try not to take part in anything specifically. And so what we saw is that, of course, there are some like programming languages that are more used. And of course, we saw that in the past 2 years, we saw that people try and want to have the same familiarity of interface and of processes across the board. So like, if I'm used to like upload a JSON file to verify a contract, for example, on Ethereum, I most likely would like to, have the same process on whatever other programming language I may use if I need to use another programming language. There are like even chains on Ethereum that have like bridged this. For example, zkSync on Ethereum, they don't really use Solidity per se on the bytecode level. They have a different language system at the bytecode level. They translate it. So maybe that could be one of the things that Bitcoin L2s can do if they really want to take advantage of the like programming language at the abstracted layer, but translate on a compatible bytecode. So that's one thing. And of course, the familiarity of instruments, like we, in the past 2 years, we saw many chain clients telling us that they wanted to go with us because we were familiar with Routescan. And so that's one lock-in that you have. And so, for example, on Bitcoin, on like the Bitcoin L1, you don't have this lock-in because there were a lot of explorers to begin with. So there were a lot of tooling available from the start because it was all open source, and like nobody was really like governing anything. And so you have like blockchain.com or like Mempool, Explorer, or others. And so there's no like clear way of doing everything, but there's actually no like, there were actually no dApp developers except for some script developers, And so I guess if the Bitcoin community wants to like bridge all the developer community from Ethereum and Solana, and like you said, you really need to think about which is the language that you want to choose best and how to actually translate, like how to port it, because you can either like make it clear that it's a different language, or you can just say, no, it's the same one, and then you just translate it on behind that.
Yeah, this is an interesting point, and actually we've observed this over at Stacks, where we actually developed our own virtual machine called Clarity, and recently we've actually started a new initiative to integrate WebAssembly, which you can essentially compile different runtimes into the Clarity VM, ultimately trying to give developers more optionality and flexibility about what programming languages they want to develop in. So I certainly agree with your point there. Dylan, coming over to you, same similar question. Why do you think developers should be building on Bitcoin L2s right now?
Yeah, well, because it's new, and because like guys like you make platforms, then you do these new things for Bitcoin that haven't been done before, and it's really exciting. And I think Bitcoiners and even Ethereum developers or other kind of developers want to kind of get their hands on something that's new. So that's great. And then there's like general approaches, like having like such a general framework that actually enables Bitcoin rather than disabling Bitcoin, and actually like kind of embracing the L2 and the really like the narrative of this approach. I think more of these sorts of infrastructures need to sort of come online, and then we're going to see all of these middle layers really kind of start taking effect, and then we're going to see lots of growth. But to really answer the primary question of like what would convince a dev to come over into the Bitcoin L2 network, well, speaking from that perspective, it's like if I were to think about it from like the outside looking in, if I was dropped out of the Bitcoin L2 tomorrow, right? What would I do? I would be choosing an application chain, basically, that would service my application's needs. So if I'm looking at the L2, I know that the L2 protocol at least services a purpose. And so, like for example, like for Goat Network, we want to be able to enable developers or real investors with a yield-bearing asset, not just a token that they can just lock, and then there is some sort of like supplement yield that eventually comes in because us as an organization do some sort of backdoor deals, and then we just sort of like enable you and by giving you rewards. No, like I think L2s are going to be eventually they're going to be optimized to service a very specific purpose, such as yield. And if you want to look at Goat on a high level, it's sort of like Pendle from the ground up. And we've designed it very similarly to it because we knew that A, yield was hot. We knew that yield fi was going to be coming around the corner. And we also knew that our network needed to support that natively and then be able to create secondary marketplaces. So in general, if I was a developer looking in, I'm going to be looking at chains to see, hey, is this thing really going to like support me? I have some Bitcoin, but I want to make a stable coin. How do I do that, right? They're looking at these chains for that specific use case. And so I'm going to go to Yala for like that one. I'm going to go to Goat for that one. I'm going to go to for these ones, right? So I think that's the special thing about L2s is that Bitcoin is embracing the actual applicability of the business's nature rather than just saying, shove all your applications on this L2 and call it Arbitrum. And I'll leave it there.
Yeah, I'd love to drill into that for a little bit because Bitcoin yield is one of the biggest trends happening right now, and Babylon has done a tremendous job in helping to create a category around Bitcoin staking. Chains like Stacks and Goat are taking different approaches to offering Bitcoin yield, so I'd love it if you could explain a little bit more about how GOAT approaches providing a sustainable Bitcoin yield?
Well, what is sustainability without transaction volume, and without transaction volume without users? So there is sort of an expectation, and it's a false flag, it's a red flag to say, oh, it's a sustainable yield without some like proof. So it's not sustainable until there's users, and it's just not sustainable unless there's like a transaction volume. That's a given, right? But given the fact that the protocol itself is designed to optimize yield, means that if these certain conditions are to be met, we see that there's a certain level of transaction volume and so on and so on. The underlying protocol, which is GOAT, it's a one-to-one with Bitcoin. So you lock your Bitcoin, you're going to get GOAT BTC, which is the gas token of the network. And so you can delegate this token similar to proof of stake, and then the delegates effectively are rewarded in YBTC instead of just the network's token. Like if you were to see on like Metis, for example, which is a decentralized sequencer, the decentralized sequencer on Metis is a sequencer set, and each of the delegates, every user has the ability to choose a sequencer to delegate their tokens to, and then they're rewarded. So these fee shares, where the sequencer is splitting the rewards with their delegates, this is how we can emulate a proof of stake network. So we believe that instead of creating a centralized sequencer, you have to decentralize the sequencer in order for you to create a fair marketplace for yield to be earned. And then so the underlying principle being Bitcoin, we should be able to then make and generate a reward off of the transaction fees of a rollup that we can then offer it to the delegates in the form of a yield-bearing token, where the underlying token has a principal and its yield. And then this can create a secondary marketplace. So that's awesome. And since it's an L2 Ethereum, I can imagine that's bridged, and that's also utilized in other smart contract platforms like Stacks. And so I see many, many contributions for the Bitcoin L2 future in general. I'm very bullish.
That's awesome. It's really interesting. I think it's a pretty clear description about how GOAT is able to offer a yield and how you're approaching that. So yeah, thanks for breaking that down. KT, I want to come to you next. So borrowing and lending is another big use case that we're seeing for Bitcoin. Yala lets users borrow against their Bitcoin, mint a stable coin, YU, right, and earn yield on that stable coin. So can you talk a little bit more about that model, about how you're unlocking use cases around borrowing and yield generation for Yala users?
Of course, thank you for the question. We enable our user to use BTC as collateral. Currently, the loan-to-value ratio is set at 75%. So, for example, for $100 worth of BTC, our user can borrow up to $75. Of course, if they're risk-averse, then they borrow at a lower LTV, which is $25 or $50. And one very important point about Yala is we are not providing those yields. We are leveraging the DeFi protocols and the different partners to provide those yields. Your question on where those yields come from and why this is a yield-bearing stablecoin. So we have three different sources. The first one is on DeFi. So we can bridge and natively mint our stablecoin on any given chain, and our user will decide where they want to stake. Could be staking, could be liquidity mining, or any other incentive offered by DeFi protocols. And very interesting application is on the restaking. So with the same amount of collateral, our user can not only borrow stablecoin, but also restake. So when the restaking protocols have their yields rewards live, they can add another share of revenue. Second part is related to a little bit on the DeFi side too. So if you are familiar with MakerDAO, they have a DAI saving rate. So similarly, we have a Yala saving rate. And on the Yala saving rate is an incentive for people to stake their stablecoin, and we provide up to 5% APY. So that's the second source. And then the third sources is TradFi related. So we have a team of quants that can implement arbitrage, delta neutral strategies. So those are proven to be pretty profitable. The average return would be 5 to 10% on the market. But in the crypto side, you can go up to 80% in the crypto market while having zero risk if you do delta neutral. So combining those three sources together with also partners that we have in our ecosystem, we can also give them extra rewards on running nodes. So adding together, it's 2 digits minimum APY for Yala stablecoin holders.
Very interesting. Jiaheng, I'm curious, what are the other use cases for Bitcoin L2s that you're excited about?
Now, in Polyhedra network, we build the cross-chain bridge, and this is very important for the Bitcoin L2 records, because if we have solid chip, we have L2, that means the Bitcoin can do many things, more things than the L1 network. And another thing is how to do the communication between different chains. You know, if it is L2, you need to do communication between L2 and L1. And you need to have communication between the different L1 and L2. And so in this case, the cross-chain bridge is very important. And if we use our technology of zero-knowledge proof, we can make the cross-chain communication trustless, efficient, and private. So I think that's a very important use case for the ecosystems in L2 networks for Bitcoin.
Yeah, no, thank you. It seems like each of you on the panel have some of the primitives that we need in the Bitcoin ecosystem to really see some of this adoption start to really take hold, right? Between different yield generating sources, borrowing, lending, bridges, connectivity with other chains. So I think that covers a lot of good ground there. I'm curious in terms of either what you've seen personally or maybe experienced across other Bitcoin L2 projects. What are some of the challenges that you've experienced in terms of building Bitcoin L2s, or that the broader ecosystem is kind of experiencing right now? Jack, maybe we'll start with you.
Yeah, so I think one of the things is, but I also think it's kind of like solving itself, this problem. It's that I think up until like 6 months ago, when like BitVM was still released, and there was some ideas on how to like roll up on top of Bitcoin. A lot of chains were like side chains that were merge mined with Bitcoin, and so the idea was that you could have like UTXO blocks in together with EVM blocks, and there was a little bit of a confusion, and I personally like don't understand the reason to like mix different execution environments in the same chain, like do two chains. Like, yeah, really, do two chains, and it's you don't have major, additional costs if you just deploy two chains. And so yes, that's the single, biggest challenge for us, is to understand a standard. Like for L2s, for example, in Ethereum, we know that there are optimistic rollups based on the OP stack, and then there are based on Arbitrum, and then we know there are ZK rollups that are mostly, everyone is mostly the same in terms of how can we extract data. But on Bitcoin, when we go to the execution environment, if it's EVM, then it's pretty much okay. But then with, if they ask for like some data on the consensus layer, then we need to like, every time we need to understand how to get the data. And like a little bit of less variability in this sense would help, because you could have like consistency in like tools. Like you use MetaMask with every chain because you know that the RPC is the same format and it works. And I think the same would be for, I think BitVM 2 is a nice step in that direction. And I would like maybe to see like not more than 2 or 3 standards, like it's, yeah.
Yeah. Go ahead, Dylan.
I was just saying I agree, because like I was saying, like the 10% right has to float to the top, and we're gonna see like this difference. But sorry, remind me the question. How do I phrase?
Yeah, it was around challenges.
The challenges,
Yep.
yeah. So like the challenges is like knowing what will and won't work, right? But based on that, the challenges really is, I think, in general, finding protocols that are willing to solve the problem of how do we tackle that UI UX problem of getting the Bitcoiner to actually do the stake or the lock, right? That is such a thing that is universal to all the projects that I talk to, and so I really think just more time spent on like really just getting more comfortable with using Bitcoin in various ways, and then I would say also just trying to figure out ways of kind of speaking more positively about the security mechanisms that are actually involved in the technical drafts of how everything is actually architected and how it all goes from top to bottom, like the watchtower. You know, they're pretty secure and they're actually pretty robust, and they can scale pretty nicely, hence like the whole L2 argument. And some people are scared that bridges like centralized sequencers, like for example, like the one for like Mantle or Optimism and some of these, yeah, they think that, like these ones are going to get like ripped out from underneath them. And I mean, yeah, that's possible. That's also because they're central sequencers. But I think at the same time there are still lots of reasons why that won't happen. So I think the BitVM2 approach is an existential honesty assumption. So for those of you who aren't aware of this, it's like me and everyone else agree that at least one of us will act honestly when making the commitment, and then somebody is allowed to actually challenge us or the operator once the commitment is made. Now, the commitment that's being made, it's a zero-knowledge proof most of the time. So if you're not a firm believer of the Goldwasser's brilliant approach to actually solving the most incredible thing for revealing and not revealing something, I mean, I don't know what to tell you, but you know, ZKP is a pretty incredible technology, and so we move forward with there, and when we get past certain barriers of like, what is actually the technology that's formulating these these stacks here, I think once there's, again, more education, we've been talking about education now for like 2 days, so I think I see that as being a theme, as being a challenge, is not clear education on what exactly these stacks are, because when you ask projects, they usually tend to have a lot of very similar stacks, and so I think we just need to kind of have a kumbaya moment and say like, this works, this works, this works, this sucks. So yeah, and then we teach people about what that means and why these things are going to be eliminated versus used.
Yeah, I think if I could just summarize what the two of you said, I mean, my current read on it is that there are now dozens, if not over 100 projects that are claiming to be launching Bitcoin L2s now. They're all making different trade-offs. Trade-offs in the execution environment, in the bridge and trust assumptions, and the standards that they're launching with. And so there has to be this reconciliation period where the industry is going to align on these standards and figure out where are we going to aggregate that liquidity and remove some of the user experience issues that we're currently seeing, and kind of get overcome some of the fragmentation, both in terms of users and with liquidity. I have one more question for you guys, because I think we're coming up on time here in a second. But I want to hear some hot takes for 2025. Where do you see Bitcoin L2s going? Do you have any predictions for next year? We can just go down the line here.
Okay, I'll start. I've been chatting around with different folks here, and we're asking about how applicable is the ETH playbook to BTC. And I think those founders who just copy-pasted all the playbook from ETH to BTC will fail. One very important piece is we are on a POW consensus. So that means everything related to centralization or anything that could not scale would be a good project on paper with zero adoption in the ecosystem. So maybe it's a reminder to all the founders to make sure that we cater to what community needs to reach product market fit before going live on mainnet.
I believe L2 network for Bitcoin will go well here, because you know Bitcoin is very important for the whole ecosystems in this area, blockchain and Web3. So, and recently more and more developers are focusing on the L2 networks of Bitcoin, and they can develop new tools, new ecosystems, and new algorithms for the L2 network, and we will have related ecosystems to support the L2 network for Bitcoin. So, well, I think next year will be better. Will be better.
Okay. Dylan, and then Jaack, final thoughts.
I have like a sort of meme hot take, which is that I think all Bitcoin developers will be multi-chain developers. They'll learn not just their own stack, but also Ethereum's or potentially Solana's or potentially Move's or potentially like these other sort of stacks. So my hot take is like the unfortunate thing that you have to tell a developer, which is like, oh, there's this one more tool that you have to know. You don't want to tell them that like with with Solidity on Ethereum, which was kind of the whole thing with language differentiation. So you don't want to have another L1 with a new DSL, which was such a pain when trying to learn a new ecosystem. And so I think when it comes to adoption, the hot take is that I really do believe that developers don't want to have to relearn an entire stack, and they also don't want to have to relearn an entire new set of tooling, especially when they're just trying to go to market as fast as possible, especially when the times of crypto are so fickle, and also the funding is really kind of drained most of the time, and a lot of people are kind of looking for areas of interest. BTC L2 has a lot more interest than other areas, but in general, cryptocurrency has always been notorious for not really having the number one hot shot, especially now when AI is the only thing everyone in Silicon Valley cares about. So it's like really, hope everyone understands this. But the hot take is that you shouldn't be having to learn new technologies just to be building, I think, in the direction that most cryptocurrency is having to kind of flow in anyway. Most of the technology is the same at the end of the day anyway. A lot of people kind of agree. So my hot take.
Awesome. Jack?
I was thinking about when the BitVM white paper was launched, and I think it was like about 6 months ago, something like that, March was possible. And I also think about when the Plasma Group announced the first version of the optimistic rollup. It was about 2019. And so I think we're about in 2020, if you count it in the time of optimistic rollup era. I think in 2025, we're just gonna have some more research on Bitcoin L2s. Like, there's still not gonna be some winners or something, and there's gonna be a natural selection over the, I think, the next 2-3 years, and then maybe I think by 2027 we will actually see a large portion of Bitcoin being used and proof of work, sorry. Proof of work being, being a, considered by what it is and not like by some evil system to, come to consensus that is not proof of stake. Yeah.
All right. Well, I'll go ahead and add my 2 cents here, which is that I think that Bitcoin TVL will hit 100 billion by the end of 2025 when you factor in the growth of different bridges and DeFi protocols that are going to be launching over the next 3 to 6 months. I think we'll finally start to see that break out, and we'll see more of these productive use cases starting to emerge for Bitcoin, people actually being able to put their Bitcoin to work in many of these different protocols. But on that note, gentlemen, thank you so much for joining me up here today. It's been a great conversation.
Thank you.
And looking forward to seeing more about the future of Bitcoin L2s.
Thank you. Bye-bye.